All right, guys, I want to talk today about one of the most hated stocks in America, and that is Sears Holdings Corporation, ticker symbol SHLD. You want to be extra careful in jumping on the short position bandwagon. I understand that everybody hates this stock, everybody is shorting it. People have been making a ton of money over the past few years in shorting this stock. I want to be careful though that if you haven't shorted this stock previously, be cautious. Don't jump on the bandwagon until you hear what I have to say. Now, just to give you all a quick background, SHLD, it was formed roughly around 2005 as a merger between Sears and Kmart. It was thought that a consolidation of these two assets and resources would help to drive sales and also lower a lot of the overhead costs. And maybe it was successful during the initial onset of the strategy, but clearly over the years you can see in the technical charts of SHLD that this strategy has utterly failed and especially blew up in 2015. Why it failed primarily is because Sears management has failed to appreciate the changing consumer retail landscape. They failed to appreciate how the competitors have been making large gains and especially not paying attention to the online sales revolution. And their earnings have been running in the red. Their cash flow, their capital expenditures are just sky high. I mean, it's terrible. This is a terrible company, fundamentally, technically. And of course, that's why people have been piling on the short position. But like I said before, if you haven't already done so, be careful. If you do engage in a short position right now, you're taking on a very real risk of what is known as a short squeeze. The percentage of float that is being shorted right now is roughly around 97%. Pretty much everybody is shorting Sears. What that indicates is that there's a lot of weak hands in the bearish position. When those weak hands get flushed out, let's say due to some positive news, and it could be short-term, it could be short-term positive news, but if there is some positive news and the shares spike up, a lot of the weak hands will not want to have that open liability, and they want to close out that short position. Well, to close out the short position, you have to buy back the borrowed shares that you borrowed to initially create the short position. By buying back shares, that naturally causes the price, the value of SHLD to rise. And when there's so many people on that short trade, on that short position, that's a lot of buffer. I mean, that is a huge pool of bearish traders. And I'm going to tell you that when you have that many bearish traders, a lot of them are weak-handed traders or they're short-term traders. That's the other thing you have to worry about, is that these guys who are in these short positions, maybe they're doing it very temporarily. It could be just an ephemeral position. Once they've made their money, and it could be a few bucks, whatever, okay? Boom, they're going to be gone. And when they're gone, that means they have to naturally cover that position. When they cover the position, boom, the shares go up. That's a very technical fear, a very technical risk. It's called a short squeeze. You want to be very, very careful. There is, in my opinion, a very high probability of a short squeeze ruining a short position made right now. The other thing you have to be careful about is Sears is it's a big time institution. It's not some, piece of crap store. I mean, yes, the fundamentals are a piece of crap and everybody knows that. The thing is, any kind of news, it could be bullshit news, okay? I mean, whatever. It could be, well, the CEO decided that they're going to engage in a new sales strategy that will help to deliver revenue and will help to cut down costs. And it could be total, utter BS. It could have no basis in truth. It doesn't matter. In the markets, It's not the truth that matters, it's the perception of truth that matters. And if the public, the dumb money, get a hold of that news and they start believing it and say, well, look, Sears, $15, that seems like a pretty good deal. I'll just buy a couple of shares of that. Well, guess what? Then that naturally drives up the price of SHLD. When the price of SHLD goes up, that means your short position becomes unprofitable. And if the price of SHLD continues to rise higher and higher and higher, you're losing exponentially more and more money in that short position. It's a very dangerous circumstance if you're holding on to the short, because then you're technically open for unlimited liabilities. The stock could just keep going up and up and up perpetually. It's not going to happen, most likely, but it could happen. And that's why the weak hands are going to flush themselves out under the perception of this fundamental driver. That's why when you consider the technical factor, the risk factor there, and the risk factor in the fundamentals, you want to be very careful. This is prime. Right now, Sears is prime for a short squeeze or a fundamental short squeeze, whatever is going to cause that stock to go up. It could happen. It could just happen just for stupid, utterly stupid reasons. Okay, it doesn't have to make sense. It could just, again, have no basis in fact. It could just go up. When that happens, though, you will lose real money if you stay in that short position. So please, 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 please be very, very careful in jumping on the bearish bandwagon for Sears Holdings Corporation.